Hey, what's going on YouTube? This is Reaching Riches. I'm here with a special guest, Dave Mazza from RoundHill. Dave, can you tell us a little bit about yourself and RoundHill?
Yeah, happy to do so. My name is Dave Mazza. I'm the CEO of RoundHill Investments. We were founded in 2018 with the premise of that there was an opportunity to create financial products, but especially ETFs for really one, a younger generation of investors, and two, whatever your age or income bracket, sort of opportunities that larger firms or other people may not be willing to create. And so the firm primarily focused historically on thematic equity investing, first to market products in sports betting, generative AI, the metaverse. And then more recently, we've expanded and kind of built on our heritage and expanded into income generating products, primarily covered call products. And most recently, I think probably the topic of today's conversation, two of the more popular products have been our Innovation 100 zero DTE covered call strategy ETF, QDTE, and then its sister, the S&P 500 version, ticker XDTE.
Yes. Those two funds, QDT and XDT, have been really blown up lately from what I can see. I believe you just crossed over 200 mil in assets under management. So it's really good to see those growing as fast as they are. And they're only out since March?
Yeah, so we launched them in March, and we've really been excited about the receptivity from investors on these products. And there's a few, I think, at least from like the broad covered call category, there's a few distinctions. These are daily. We trade options on a daily basis, particularly options that expire on the same day, so zero DTE options, and we pay weekly distributions. And that, I think that to date, while there were ETFs that paid weekly options before, they didn't necessarily last in the market. They didn't raise a significant amount of assets. That same can't be said about QDT and XDT with their strong investor receptivity to date.
Yeah, I think those were the SoFi funds. I believe they were the previous weekly payers.
Yeah,
Um,
that's correct. Yeah,
yeah,
they were the first to do it, which was certainly an innovation in the industry that we kept our eye on, and looked to apply that to the covered call space.
okay. Um, so how does the fund actually work? Could you explain that a bit?
So the way at kind of the high level, the way the fund is structured is that we there's a long any covered call strategy. Let's start there.
Okay.
Has a long position on an asset, and you sell calls against the same asset. And the idea is to generate additional income from those options premium. And then, of course, your potential upside is limited. Now, how QDTE and XDTE are implemented is probably where some distinctions happen. So QDT and XDT have synthetic long positions. The way we do it is with a long position via a very deep in the money call option on the respective indices. The intention there is to replicate the return of a traditional long position.
Mm-hmm.
And then what we are doing is selling out of the money zero DT options on the respective indices. So again, you combine a synthetic long call option, deep in the money, with out of the money options that are sold on a daily basis.
Okay. And those are like true zero day to expiration options, right? You don't hold them overnight.
Correct. So and this is a good part of the conversation to have is, so if you look on a daily basis on our website or look at a third party website, the holdings file actually doesn't show those calls because they've expired at the
Yeah.
end of the day. So the holdings that you see are those synthetic longs, and then cash that's used for collateral and such. And then for an investor who is like yourself or others I know who look at this, we post the intraday trade that shows those sold call options.
Yeah, yeah. I know. I track these on a weekly basis just to see how they're doing. You guys have really been killing it lately, so good job on those short calls.
Thank you.
Is your strategy like systematic? Like you would go out and sell, like say a three delta, or do you have some flexibility there to choose what strikes you want to sell that week?
Yes. So on the way that works is that the strategy is active, but I want to emphasize that it's not necessarily 100% rules based. Where it is sort of codified is that every day we are selling the zero DT options, right?
Mm-hmm.
There's not going to be a day where we decide we don't want to do it, or anything of that nature. So when I want to emphasize that point, where there is distinction is that one, for two reasons. One, because of liquidity in the market, and two, really looking to balance the potential for high income with and to date, I think we've been relatively successful this with the potential still for capital appreciation. We do not have a codified rule of the moneyness of the options that are sold. So those may move. They're not necessarily going to move also sort of depending upon how we feel on a given day, but it's going to be based on the volatility environment so that one of two things potentially doesn't occur. That the distributions that are paid go close to zero, being extreme here, or the distributions are so high that we would have the potential to really detrimentally impact the net asset value outside of what would occur with just having that long position. So that's where the balance comes into play.
Okay. Um, yeah, because I've kind of noticed some of your late calls, like when volatility was high, you were selling them more like out of the money, and then now that vol's dropping, you're kind of getting back to close. But it looks like these funds are capturing a lot of upside still.
Yeah, and so that and certainly we've been pleased with that to date. Certainly, I think so. The inflows that we've seen have been emblematic of investors potentially being pleased with that as well, because that's really when push comes to shove. There's there are products and there are indices that systematically do this on a monthly basis, perhaps even on a weekly or daily basis, and they choose a set moneyness, and it just kind of runs on autopilot. That may work, particularly if you look over the very long run. The total return potential of all these strategies probably could be quote unquote similar,
Mm-hmm.
but the distinction is that having that flexibility to be attuned to the volatility environment, particularly changes in the volatility environment, meaning a VIX going from 10 to 15, 15 to 20, 20 to 60, and back, is where we think the flexibility that we have and the need to be adaptive to the environment really is important.
Okay. Yeah, I think the community and other investors are really pleased with how you guys are managing the fund so far. I know that a lot of them are really concerned about the NAV, and we don't want the NAV to just erode over time as you guys are distributing out these dividends. One main thing that a lot of people are kind of curious about is that big volatility day we had on August 5th, um, where, or that, I guess that trade week, it was, what was that, 31st through August 6th, that trade week. Um, I, I, um, I see that you guys collected about $3.1 million in premium, and you guys had what 4.59 million outstanding shares, which should have equated to about 93 cents in dividends. But we were paid out 47 cents. Can you tell us where the extra money went?
So the way to think about this is that really with strategy of this nature is again there could be funds that one either have a set sort of standard moneyness, and they're every day or every week or whatever ever time frame that they're using, are doing sort of a set distribution schedule, and then kind of paying sort of a set level. So those are gross premiums, and really there is where we as a manager need to balance our secondary objective of the fund is capital appreciation. So in those cases, there's not a set rule, but there could be times where in extreme cases where you could have a premium that is outsized, which could impact the net asset value in a way which is not going to be have a positive long-term experience for investors, where the entire potential distribution may not be paid out, but it's not being paid to go into something in the year end or something of that nature. So that again, there's an emphasis between really the primary objective is creating a potential for high income balanced with that, not doing something detrimental to the net asset value of the fund.
Okay, so you're like managing the distributions for us then a bit.
I would say in extreme, when you have extreme changes in volatility, where you would have the potential to see a distribution, particularly in a down market, have a detrimental impact. Yes.
Okay, all right. So so we can kind of expect that those extra funds to be paid out in other weeks then.
Yeah. So again, and this is that was again what we saw was something where a VIX was essentially doing nothing, and there was really minimal volatility for some time in the market. When you have a spike, which certainly could have the potential to see again, is where we would use our discretion to balance again what we believe is going to be the potential long-term benefits of shareholders.
Okay, yeah, I think the consensus from what I'm hearing is that what you guys did was what most investors wanted, was not to pay out all of it, hold some back, just so you protect the NAV a bit. So a lot of people are happy with how you guys handled that.
All right, well, that's good. That's good to hear. I mean, certainly these are newer strategies in the market. What it's been real. I've been in the ETF industry for nearly 20 years, and what's great about these funds, and not just RoundHill's, others, but what we're seeing it here at RoundHill is the community interest in these products is awesome, and I say that very seriously. And so, to me, it's really cool to see folks like yourselves and others being so engaged with them, and focused on sort of how they work, and sort of how they can use them.
Okay. Yeah, we really appreciate you guys being so transparent on posting all of your trades and your holdings on the website on a daily basis. I know not all funds do that, so it's really great to see that you guys are.
Excellent. Happy to hear that.
So I have noticed on some of your long calls, your deep in the monies, that you swap between NDX and XND. Why switch between those?
So some of that is managing sort of using the micros to have more precision, and so those is where and I can't kind of with certainty say you'll never see this or you'd see this then. It's that our goal is to have that is to kind of build that long exposure, and if it requires to use a more smaller size contracts to do that, we'll do so. Okay. The other thing which folks probably have seen and they will likely continue to see is that over time, particularly as markets go up or if they move, there may be more strikes or more long. Sorry, I should just say more long calls with different strikes, so that the long call and the deep in the moneyness will have that potential for the replication. So each of the products today have two long calls. One which will be expiring in March 2025, and then one which would expire in June 2025. So Again, can't not at not that I'm not at liberty to kind of tell you what the next ones will look like, because
Yeah.
the market will tell us,
Hmm.
where those need to be.
Yeah. Yeah, I did see that you guys did add another long call to those. So you have two now. I think QDT is at what 1669, and then they have 1888.
That's correct.
Um,
So, but the emphasis there would be that they would all, again, as they roll off, or they roll in, if you will, they'd all be structured to kind of have that, 80 to 90 well, I shouldn't even say that with precision. Whatever level of deepness, if you will,
yeah.
is required to build that long position, is where we would target at that particular date.
Hmm. Um, I can't find any information on those long calls, like because it's like for NDX. I haven't seen that type of ticker anywhere. Could you tell us like where we can find more information on that?
So those are flex options.
Okay.
So that is where, while they're still cleared, you're able to work with a broker or a counterparty, whatever the preferred term is, to sort of negotiate what that would be. Whereas the zeros, those are fully listed,
Okay.
kind of almost standard options. They just expire in the day that they're listed.
Okay. Is there anywhere we can go to see any of those long call, like an option chain or something?
I think if you were to go back and look on sort of those dates, I think you would be able to see them. We try to provide, at least to the best of our ability, in our holdings file, sort of where that transaction occurred, and sort of what they and what the value of them were at the time.
Okay. Um, and with those long calls still, since you did add a new call, will you be like selling off the old one here soon, or you're gonna hold that to expiration? Um, when do you make that determination?
The objective wouldn't necessarily be to, I'd say, sort of like remove the March and go all to the June or all to the September, looking ahead to the future. Um, the idea would be that we would kind of build those positions, and particularly as the funds grow, to sort of have those kind of strike levels move through time. So those will change, but not, I'd say, not on a those will not be changing on a daily basis.
Okay. Um, and with those calls, if you do like sell them for profit, will we see those profits in a distribution, or we do like a special distribution at the end of the year for that?
You so the but when because we pay weekly, so we are sort of estimating, and then there will be sort of, as you get closer to year end, an idea of sort of what was sort of, I'd say, fully sort of made at the fund level from a tax purposes. And I can't necessarily say with precision exactly, in the future, what would occur there.
Okay. Um, so some of us are like using these funds to fund like a retirement, or like another income for retirement, but like not roundhill funds, like other high yield funds, they're kind of requiring us to reinvest like everything or a large portion of it. So I think a lot of people are moving to roundhill because you have like nav stability, and that weekly pay does help a lot. Um, so my question is, if somebody was trying to live off of these funds, is there a recommended reinvestment rate, or can somebody just pull 100% of the dividends to live off of?
So we see, at least to date, and one of the beauties of ETFs, particularly products like this, I'm sure someone will come to us and share a different way of using them.
Mm-hmm.
But there's two camps. And again, which is why we are focused on trying to have that balance of the potential, not killing capital appreciation potential at the expense of paying really high, consistently incredibly high dividends or distributions. So the two camps are, just as you said, there are folks that are, willing and interested in reinvesting these on a weekly basis. I would say, though, compared to other funds of this ilk, there is not as much of a quote unquote requirement to do that to maintain your investment, at least your principal investment, if you will, because there's other folks who are using these products to both have additional income for living expenses, to perhaps make other investments in different funds. So I don't. Our objective is not necessarily to make our investors beholden to only using these funds to put them back in our fund to then pay them another distribution. If someone wants to do that, we're not going to stop them, and it very well could be a great strategy for them. But really, we actually, right now, really kind of see, yeah, some folks certainly are doing that. They want to build that. Others really are using them for that income, for any expenses they may have.
Yeah. With that, with the distributions that you are paying out, is that you're paying out just whatever was collected, right? It's not like net losses.
That's correct.
Okay, okay. Just want to make sure I have that correct. And then I guess another big concern people have is stock splits. I know you guys are probably really far away from having a stock split, but if we do have like a really bad bear market and the NAV just keeps dropping, around what price would you say a stock split might be possible?
So I don't have, and this is sort of where there is perhaps some art when it comes to managing ETFs. So I before joining RoundHill, I worked at Direction, and Direction is known for leveraged and inverse products, right? And they're really intended to be trading tools. Yep. And so those funds, incredibly volatile for a reason, and people really try to profit from that volatility in those products, or they should, because they really should be thinking about, is it a buy, sell, or hold on a daily basis? Is that if you were to have a catastrophic bear market, and the fund's net asset value required us to make a split, I think any fund provider would have to do so. But we do not have a policy that says at this price we're going to need to do this. Again, our objective is to try to pay people an attractive income that we're generating from these options trades, but without doing so at the detriment of having significant NAV erosion. That can happen. I want to be very transparent about that. This is not as if we have found a way never to have NAV erosion because the market moves, right? Like, we have to remember that. But what we are using, again, and people have seen this probably with the weekly distributions, they will move for a reason.
Yeah. I know I've noticed with your weekly distributions that on like the stock chart, I don't even really see like the dips from the X dates. Like, the chart's way more smoothed out than other funds. So that's really great to see.
Yeah, and that's something where I would never come out and say, again, you're never going to see the NAV decline. Yeah. This is not a cash vehicle, right? We have exposure to equities, but we are trying to the best of our ability have the potential to pay those relatively high income without doing so where we're eating away at our NAV to give it back to you.
Okay. You mentioned Direction, which is a levered like funds. Do you have any plans of making a leveraged income fund?
Not, I don't have anything to share on that. But we have increasingly been hearing from folks that they're interested in it.
Yeah.
So we're putting on our ETF lab coats and thinking about what the best, but potentially way to do something of that nature. What I can say, I can't say exactly when it's coming, but we have filed for a small cap version.
Yeah.
And that our plans are to have that come to market in early September. And the ticker on that is RDTE. And as we're able to share more information with folks like yourselves and others, believe me, we will. But there's some, of course, regulatory requirements that we can't do so. But I can tell you that has been filed for, and we intend to launch that when we're able to do so.
Yeah. That prospectus from the SEC filing has been passed around in the community a lot, and the feedback that I've heard is very positive. People have been wanting you to release it like 2 months ago.
I guess all I can say on that is I wish we could. But what I will say is have a little patience. It's coming soon.
Okay. I think your timing is pretty good with that. I think rate cuts are going to be hitting us soon. So the Russell should be going up good, like a pretty good amount. So the RDT should benefit a lot from that.
Yeah, I mean, not to make this a markets conversation, but you're spot on there. Is that small cap companies have struggled for some time now. There's been, you could listen to the talking heads on CNBC or other places debating when are they going to come back. We saw a tease of what a rotation will look like in the last few weeks, but there hasn't been a catalyst for sustained outperformance, frankly, because of the debt loads that so many small cap companies have compared to really the Magnificent Seven stocks, which have been the market leaders. But you hit the nail on the head. It seems so simple, but rate cuts and particularly clarity on sort of what the path of those could be is I think a very reasonable catalyst for us to see broadening of the markets, especially benefiting small cap companies.
Yeah. Some other SEC filings that have been passed around. Looks like you guys are going to be coming out with like a target distribution fund, similar to, I think Defiance has some out. Can you comment on any of those?
Yeah, to the extent that I can talk about them, I will. So yes, we have filed for target managed distribution products. The idea of these funds is, again, they are in the income camp, so this kind of broader category, but they are a bit distinct. So we won't be selling daily options there, nor paying weekly. But the objective there is at the beginning of the year, excuse me. We would be, basically at a per share level, setting what that target distribution yield would be, 10% and 20%, and then paying that distribution on a monthly basis. So there, I think those products have sort of in some ways they all compete, but they really are a bit different, in my opinion, of sort of like particularly how they can be used. I think those are ones that really have, are intended to be really like, you could perhaps replace S&P 500 exposure with something of that nature, because they're going to intend to track the performance, and then pay you that managed distribution.
Okay. Why go away from weekly payments on that one?
Well, investors are certainly, I know that they're gravitating toward the weekly. One is they're not, the way those funds are structured, it just doesn't, at least as of now, paying weekly is not really, I think, in the fund's potential best interest. So those are not going to be weekly. RDT will be, though. Okay. I want to just emphasize that one.
All right. And those target funds, those are index based, right?
Yeah, so those are on the S&P 500. Again, one targeted 20 on a 20% distribution yield, and then a 20% distribution yield.
Okay. And then I think the last FCC filing that I saw passed around was, I think it was index based, but you don't pay a distribution.
Yeah, so that is sort of like the second cousin, if you will, of these strategies where there is and maybe not for you or audience, there is a big group of investors who love income,
Hmm.
who want frequent income, but then there's also some folks for tax purposes that don't want a distribution. They just want market exposure. So that's another fund that we've been working on, and the ticker on that is is XDiv, and the intention there is to not to pay a distribution, but to track the S&P 500 performance.
Okay. Do you have like an ETA for these?
For those for the target managed distribution and the no distribution, I don't have a sort of an ETA to share presently.
Okay. Um, I think that's all the questions I have. Do you have any questions for me or the community?
No, what I would say is, and we are seeing great sort of like, as I noted a few minutes ago, really great interest in having good conversations with folks like yourself. Keep it coming, right?
Yeah.
We're getting tons of inbound inquiries to our info at roundhillinvestments.com.
Yeah.
Visit our website. We put out some content on this for people to understand how distributions work.
Mhm.
There's more coming on that, but keep the conversation going. That would be my, not necessarily a question, but my big ask. And if people have other product ideas,
Mhm.
we are certainly open. And we love sort of, again, the firm was founded to be able to really connect with investors in a different way than kind of larger firms or other people may not necessarily be equipped to do, or perhaps want to do, because their target audience is institutional investors only. Really, our target is retail investors and financial advisors who are building portfolios and looking for unique solutions.
Yeah. I mean, these two funds for sure have been stealing investors from other funds, from at least what I can tell. So you're doing something definitely right there.
Thank you.
um, and then just a quick thank you for the T-shirts. Everybody's been loving those. People want uh, other tickers now, like
Okay. All right. Well, that's another good
XDTA.
idea. I love. It's good to get some homework for the team.
Yeah. And then last thing, it's not really a question, but in our Discord, there are other fund managers in there. They don't really speak, but they are in there to listen to any feedback. Would RoundHill be able to join and just listen to what we have to say?
I think so. I think definitely on the listening side. So you and I can follow up on that, and I think that's really good to know. If people are doing things that we're not, again, that's one where we'd love to hear about it so that we know whether we should be doing it or not.
Yeah. All right. So that's all I had. Do you have anything you want to say before we disconnect here?
No, I think again, the only thing I say, thanks for having me on to have this conversation. Keep the dialogue coming. We love hearing from. We love the receptivity, obviously, but hearing from investors talking about our products. So keep it coming.